Okay, good afternoon, everyone. Thank you for joining us for this afternoon's virtual session featuring Peter Squire from the Winnipeg Regional Real Estate Board. My name is Lanny McGinnis. I'm President and CEO of the Manitoba Home Builders Association, and it's my pleasure to welcome you here today and kick off our first virtual education session of 2021. Our plan is to host a number of these throughout the year, but this is our first one this year. Just before we get started, I'm just going to have a few quick housekeeping reminders. During today's presentation, we ask that you please mute your camera and your audio. This will ensure that there's less background noise for everyone joining today's session. I'd also recommend that you set your view setting, which is in the middle of your screen, middle top of your screen. If you set that to who's talking, it'll ensure that our feature speaker is highlighted at the top of your screen during his presentation. If during the presentation you have any questions, please feel free to ask through the chat function. If you could use the chat function, which is the little word bubble on the right hand top of your screen there, just click on that. A chat box will open, and you can enter your question using the chat function. We'll be monitoring the chat during the session, so if you have any questions, please put them there. We'll make sure that we get to them. And as well, if at the end of Peter's presentation, if you have any questions you'd like to ask, just unmute or turn your camera back on. I'll unmute you, call on you, and you can go ahead and ask your question of Peter. But thank you for your cooperation. It just makes the whole thing work smoother if we take those steps. So now let's get underway. It's my pleasure to introduce our guest speaker for today's session. Peter Squire is Winnipeg Realtor's Vice President of External Relations and Market Intelligence. He's a keen media commentator, as I'm sure most of you heard yesterday afternoon if you're listening to CGOB. And he enjoys keeping the public informed on what is happening in our local real estate market. Peter has had a fascinating career in public affairs for over 35 years. He's passionate about getting involved in issues and projects that will enhance Winnipeg's quality of life. One which comes to mind is the Canadian Museum for Human Rights, which he embraced the challenge to get the realtors behind supporting the museum here and right across the country. Peter also serves as a director of the Winnipeg Housing Rehabilitation Corporation, which is active in building and providing affordable housing here in Winnipeg. He also has a strong advocate for neighborhood renewal and home ownership as co-founder of Housing Opportunity Partnership. So without further ado, thank you, Peter, for presenting to us this afternoon, and I'll turn things over to you.
Thanks, Lanny, and I really appreciate the opportunity to share with you what kind of year our board had in 2020 on our multiple listing service, our MLS, and try to get into a little bit of what's happening in 2021. It's still early, and I really wait till the first quarter to do my first serious assessment, but there's enough indicators out there already that I think most of you know that we really, as I told Lanny, we really didn't stop at the end of 2020. It's really never let up. So, and I just going to say it is going to be quite an exciting year, possibly even more than what we saw in the last 7 months of 2020 on our MLS, and maybe not unlike what we see with our Jets in overtime. But the difference is they're more predictable and likely winning those 3-on-3 overtimes. We're still not quite sure how we'll end up as the year unfolds, but right now it's looking very promising in terms of the much higher sales than previous year sales, and the people are so well engaged in our market like I've never seen before. So the first slide is really just showing you one thing we always look for, and I have over a number of years, is you want to see a balanced market, and that's the healthiest market for both the seller and the buyer. And you know, in large part, we've had that since really 2011, 2012. The pandemic changed that dramatically in 2020. But having said that, and this is just showing how many listings, all MLS listings were entered on our system in 2020, we were still just down a little over 10%. So it's not as dramatic as it may have appeared during some of those months as we got into the second half, where our active listings, which means our current inventory that we have going into that next month, was down compared to the previous year about 40%. So dramatically different than what we're actually entering. If you look at the sales, that's really the story. Our listings were not able to keep up at all with our sales, and that really started in earnest in April when we had the economic shutdown. We were actually in quite good shape at the end of March in the first quarter, both in the sales and listings perspective. But in April, our listings dropped off about nearly 50% compared to sales about 30%. And that never really changed throughout the year. Sales just keep coming back, where listings never really even caught up to the same month the year before. So just in terms of sales, let me just speak to a few highlights on sales. In 2020, it was more a rural phenomenon. And that's in part because in 2018, 2019, we expanded further out into our rural region. Hence why we're renaming our formerly Winnipeg Realtors to Winnipeg Regional Real Estate Board. We have a larger, more expansive rural region. We now go down to Winkler, Morden, and Altona, and then grab a number of other areas, even in other real estate brokerage offices that weren't participating on our regional MLS system before. So that certainly expanded things. But the other thing that was more important really, and again, 2020, was what you've heard in the media, and that really happened across the country, a bit of a flight to more space in rural properties. We saw 25% increase in our cottage properties. Our vacant lots, which are largely a rural phenomena. As many of you know, we don't have a lot of vacant lots available within the city of Winnipeg, certainly not on our MLS for sale. So when we see those sales spike up, those are largely rural sales. They were up 72% from about 500 to over 800. Steinbach was clearly the leader there. They had 111 vacant land lot sales themselves. 29 of them were building lots in Blumenort, not just in the city of Steinbach, but in that surrounding Steinbach MLS area. So that certainly was another indicator of some of the movement that was adding to the rural sales. In terms of leading in sales, Steinbach was our clear MLS leader at nearly 900 sales. Morden Winkler was second at 700. And in third place was Waverly West at over 600. And in particular with Waverly West, we're largely a resale database, but what we're seeing with some of these listing shortages, especially in Winnipeg, is we're seeing some more representation of new homes on our listings. And last year, 43% of our Waverly West sales were new MLS properties, and not just single family. There were townhouses, I believe, some condos, a few vacant lots for very few, but a few for building. So that was certainly notable. And just while I'm on the new side, because of obviously who I'm speaking to, we did see other areas see some notable representation well beyond what we normally see in a typical MLS area in terms of new home sales. Sage Creek was at 21%, St. Adolphe 26%, Naperville 25%, Oak Bluff 28%, Winkler was at 23%, and I've already mentioned how Steinbach had some strong vacant land sales as part of their large number of sales. This is this is a really good indicator of where prices are going. Will Dunning's really done a lot of work on this. He's the chief economist with Mortgage Professionals Canada. He spoke at our forecast event back in 2018. But the 40 to 60%, if you look at the top chart, that's 2001 to 2010. 40 to 60% is considered more balanced market, where again it's healthy and there is some choice, and but you're not seeing major bidding wars and well above list price situations in a frequent way. But as you can see from that decade, we were well above the 60%. I know on single family, we had probably a few years where we were over 80%. And that's when you start getting into the well above list price offers and bidding wars. And we were considered at the time, and it was even written up by RE/MAX at a national level, that Winnipeg was one of the tightest markets in the country in that first millennium decade. And it really was problematic. And the reason is we not only had a very successful provincial nominee program with really strong immigration, but we had a real dearth and shortage of apartments. So the MLS became the default for anyone coming here because of the lack of rental. So we actually got together with your former CEO, Mike Moore, and others in the housing stakeholders and worked with the former provincial government to work on getting more housing supply. Now we're still challenged with housing supply, but rentals in better shape. But now we're dealing with more inventory issues, I think, with both our MLS inventory and likely the home builders as well. If you look at the chart below, the 2011 right up to last year, you can see we were able to get that line down, that sales to listings ratio down under 60%. And like I said, we did have some success at seeing more of a balanced market. But look at 2019 at the end and 2020, you can see how it's spiking back up over 60%. And I shall see when I look at the end of another chart that it went even higher when we did the year-end report. In terms of dollar volume, again, this is another story. I mentioned during our market insights event in February that, you know, it took us 99 years to do our first $1 billion in 2002. And yet in 1 year, last year, we nearly did $1 billion. So that was very dramatic. And we certainly, no one predicted that in any market, let alone our market, to see that kind of an increase. So our sales were up 17%, but dollar volume was up 21%. So up a little bit higher than, so we obviously did see some pressure on prices in 2020. In terms of listings, again, I showed you the listings for all MLS. Not surprisingly, RD makes up more than 70% of our MLS sales and listings too. So it's going to be similar to what we saw on the MLS. So that's a little, I think, more than 10% drop. So again, not as dramatic as what we saw during the months on those active inventories where we found our listings depleted before we got into the next month. And of course, as a result of all that activity in 2020, we were not left in great shape going into 2021. As you can see, basically our residential detached or single family home listings were cut in half. And when you still have a market that's on an upward trajectory and going at the rapid rate it has been since June and well into March, that's not going to meet the demand going into 2021. So, and we even had a situation in December, and residential attached is another area where we had over 100 sales for the first time for residential attached, and all we had left at the end of December was 100 listings. So basically, if we match those listings, we have nothing left unless we get new coming in the next month. So and even condos, which have been considered oversupplied in some previous years, they've come down as well, as I'll show you later on. In terms of sales, again, no surprise, you know, we broke over the 10,000, which was probably something I was looking at for 2020. I mean, my forecast for 2020 was quite positive, and we had a great start to the year in our first quarter before we were even hit with the pandemic. But look how that's exploded. It didn't only just go over 10,000. It shot up a whole nother threshold level to nearly 11,500. And some of those months, by the way, were really, again, our best month in previous to 2020 was May 2019, and we were just over 1,700. Well, in June, July, and August, we had 3 consecutive months over 1,800, and June and July were just under 1,900. Here's what I meant by when you start seeing, even though we didn't have as many listings as I showed you, compared to 2019. Look at the difference in conversions from 2019 to 2020. When you get that higher degree of conversions based on that incredible demand that really stepped up, late May and then right through the remainder of the year, that's where your sales are going to start to really spike up. And another example of those conversions are when you get into over 60%, you are going to see more above list price sales. So again, it went up another 10% points. And that chart is an annual chart. If you look at the last 3 or 4 months of the year, we were more 33, 34%. Really, 1 out of 3 were above list price for single family. And of course, and we also saw some months where the average price was into the low double digits. Another indicator that I look at, and it helps, and we've seen years as high as 104, 105% in that first millennium decade, is when you're seeing it's kind of like an equilibrium really is at 100%. So when you see your sales price bumping for all sales, so we're not talking just the select neighborhoods that people like to talk about, or select areas out in rural Manitoba that are doing really well, like Steinbach or Morden. We're talking our entire system. When you see that entire system go over 100%, that's telling you that a number of properties are selling well above that, that equilibrium level. The average price at the end of 2020 ended up, it seemed like it'd probably be higher based on what we saw in the second half, but it ended up around 5%. So that's actually not, compared to what we were seeing across the country, that's very reasonable. And I like to see that because one of our strengths as a housing market, as I think most of you know, is how affordable we are relative to most of the other major cities in the country. So to hold on to a relatively modest increase compared to relative to other centers and markets across the country, I saw as a positive thing. But obviously that demand, especially at the end of the year, raised those prices up. This chart is just really a long-term trend. Why I threw it in is just showing you we're more like I've said a GIC. We're stable, we're steady, and I'd like to be able to say that now, and I really can't use that probably in 2021 and end of 2020 given what we're seeing. But we have been historically a very stable and steady market. And just watching that chart as it goes up, we've only had 2 years in that 50-year history, or sorry, I guess 60, 65, or well, actually that's more than 50 years, but going up to 2020, in that long history from 1965, we've really, I think, only had 2 years where we dipped. And when we did dip from the previous year, we were down about 1%. So we've been incredibly steady. We don't have those big wide swings and ebbs and flows that you'll see in some other very volatile markets. Just on the, I don't have a lot of time to get, but I'll just share quickly. You will not be surprised as home builders that the Southwest area, which is number 1, is our top average price area. That includes Tuxedo and Waverly West and some other obviously newer areas, and River Heights and some nice, really Charleswood. So I don't think that's a surprise. And you can see there's quite a range of average prices throughout our market region. Just for your benefit, 2 is southeast, 3 is northeast, 4 is north, going north, 5 is west Winnipeg, and R is our rural area. Rural is closer to what our overall average is, to that, closer to that 341 that happened last year. But the over 450, just to single out a little bit on the area 1, on Southwest, Tuxedo for the first time in 2020 had an average price over $1 million. And we had our largest number of $1 million plus sales over about 65, when we've had normally around 40, 45. So it was a really upper end market in 2020. We only 2%, our sales under 300,000, for example, were only up 2% in 2020 when other higher price categories were up significantly higher, much higher percentages than the overall average of 17%. Waverly West also, of course, did very well, and with all those new home sales added to the mix of resales in 2020. Condominiums is really the comeback kid, as I referred to it in 2020. It was really suffering from COVID, especially through the summer months. As we heard, people were looking more for single-family homes and looking for more space, and really, to some extent, that rural outside the city with rural properties. But what we saw in the last 3 months is condos came roaring back, and it was actually a nice surprise to see it actually had its best. We had our best year ever, despite the really slow start. And one reason I attribute to that, and we're seeing that again in 2021, is we're now seeing more of a price differential between single family and condos. We've always had that, where our most active price range for single family has moved up from 250 to 300 to 300 to 350, and in some cases even higher, as we're seeing this year. In the case of condominiums, their most active price range is still from 150 to 200. And when I looked at our home price index, we're now part of with our Canadian Real Estate Association, that benchmark for the apartment condo sits right at 200,000, and that was right through 2020. So that affordability as an affordable flight option for affordability certainly has made condos more attractive. And I think some investors are picking up on that trend as well, or certainly on those differences, to see that condos could be a really good opportunity given their excellent affordability. And the big reason why we actually were able to get into that highest sales for condos ever is those conversions, which I showed you for single family. When you go from 58% to 75%, well, we did it on a more modest way from 45 to 51%, but that 6% makes a big difference when you're looking at we had around 3,600 condo listings. Another 6% is going to bump up your sales. Now I talked about inventory before. As you can see from some of those higher bars in previous years, and I know Lanny knows all about this from CMHC's home housing market assessments reports. They weren't just referring to our active resale database, but they were certainly referring to the new home condo market, new condo market supply. And you can see how those bars are up higher than the 10-year trend. And so supply has been a bit of a challenge in some previous years with our condo market, and that's what's kept the prices under control. But as you can see by the last year, they've come down. They're more in line with that 10-year trend, and certainly that will help firm condo prices up, in my view, going forward. And just again, another example, and I may have skipped over it now. I'm trying to think. Well, yeah, I did show you the 28% for single family. Here, it's markedly different. The above list price sales for condos are at 8% compared to 28%, and that didn't change a lot at the end of the year. May have gone up to 10%, but certainly different than the 1 out of 3 for single family. And again, just a quick show of the that equilibrium number I talked about at 100%. Condos, as you can see, haven't got up to 100%. I don't know if they've ever been at 100% in our marketplace, and last year they were at 97%. So they have been higher, nearly 100% in 2012. But generally, and that's again another sign that you're just not seeing those above list price sales like you were seeing in 2020 and still are seeing now in our single family, our category. And again, reflecting that is our price. I kind of said we've been in a bit of a trial for a number of years now. We're kind of been from 230 to 240 and gone back and forth. You see, we got up to 244 in 2017, then we fell back in 18 and 19, and we just got back over 240. So what I'd like to be able to see, in this year as things firm up with the alternative from the single family, given how challenging that's been with the bidding wars and rising prices, that single family can certainly do, or condos can do a little better than the 240 this year. And another example of condos versus single family, as you can see, they're still 77% are still that sold in 2020 were still under 300,000. For single family, that's changing quite dramatically. I believe will probably be less than 50% or 40%, I should say, that will be under 300,000. That's really starting to move upward for single family. And just quickly on condos, I did this more out of interest for of course the condo builders in the audience here. And I'm very familiar with that area because I've lived out in River Park South and Norman Park, so I know that area of the city really well. But look at the percentage in dollar volume for even 2019, but 2020. It just shows you how dominant the southeast area, that's our area too, which is southeast Winnipeg, has been on the condo market. Of course, that doesn't include our number one selling area, which is Osborne Village, which is in area 1. So, and just in terms of rural, by the way, rural still doesn't have a lot of representation in terms of overall condo sales. They're probably about 12, 13% out of the 100%. So condos are still largely a city of Winnipeg area for activity. But anyway, the southeast really, if you just go down St. Mary's or St. Anne's, it really shouldn't be a surprise that area has really become a significant condo market area for Winnipeg. This chart, I'm near the end and be glad to take questions, but I will get into a little bit of my predictions for 2021. This is a really important chart that Will Dunning did. We did one of our own last year with the Manitoba Real Estate Association in June. And essentially what we discovered, and we really didn't know as of course we're in uncertain times given we were already into the pandemic, is how are buyers going to respond to the pandemic? And our survey showed the pandemic had literally no impact on them. If it had any impact even at the early stage in June, was that they were going to be more motivated to enter the market than not. It was where more people listing were a little less motivated. So what I would indicate is that there's more people motivated to buy than those willing to put their homes on the market. So that survey was something we certainly used throughout the year. And then what happened is Will Dunning went ahead and did something similar on a national level. And this chart I really like because it shows the different times he's done over the time he's been tracking home ownership intentions. And you can see it's gone from 7 to 20%. And even if you look at, he did one more this year, it's gone up another few, I think it's up to 27%. So that's a dramatic difference from those that weren't intending to get into the housing market to those who want to. So that's obviously been borne out in our local marketplace. And I'm sure if he was to do that in Winnipeg, that percentage might even be higher because of the better affordability we have, especially for those first-time buyers in our housing market. Just looking at, I'm looking at sales again. They're well. I'm not seeing the. Now the charts. It's hiding my sales, but just on a. They're well up again as they were starting in June over the same month the year before. Listings, as you can see, are down nearly 15%. So that's not what we want to see. And there's that active inventory, which I talked about before. That's what we have after all those sales and after those listings are entered going into the next month compared to the same month the year before. So again, that same pattern happened in the second half of 2020 where the inventory is that much depleted, and unless we get new listings coming in the next month, we're in big trouble. Similarly, in February, the sales were at 48%, and really an incredible result. And listings at least are closer to what they were the year before, at just under 3%, and even better than the 5-year average. And again, our actives are back to the 40%. I'm just going to give you a little sense of March, and then I've got a chart showing kind of the predictions that I made that I'll likely have to adjust given what's already happening in 2021. In March, for the first half, we're already seeing our sales up 69% and dollar volume up 78%. So they're just continuing to go upward. And in terms of condos, we're up over 100%. So the condo market in particular is really, I think, starting to show incredible strength based on those rising prices on the single family side. And we're seeing some similar development on townhouses and residential attached because of they're a cheaper alternative to the single family home. Here's the outlook, and then I'm just about wrapped up and be glad to take questions. You know, as we got to the end of December and saw what happened, you could not help but think, why couldn't this continue into 2021 with these historic low interest rates, demand that's been supercharged based on a game-changing pandemic that's motivated people to look at their homes like they never have before in different ways in terms of what space they need and how they're going to, accommodate that through making changes. Some will be renovations, some will be selling the home and moving into a new or a resale home. So again, I think that we'll certainly push up well over that 11,000 again. I even predict we could get over 12,000. And based on what we're seeing the first quarter of 2021, it certainly looks that could be very much in view. In terms of the residential average selling price, I think I'm already going to have to adjust that. We were at 341. I thought we could go maybe another 20,000. But if you're looking at 10 to 15%, we're probably more in the 370 to 380 and possibly higher. And you'll find something interesting when I broke out our rural activity in February compared to City of Winnipeg sales and average prices. Winnipeg's really separated in the last from the same month in 2020. The average price for both single family and rural and Winnipeg were around 312,000 in February 2020. In February 2021, the rural went up to 325, where Winnipeg's went up to nearly 380,000. So again, that's where you're again seeing all those bidding wars and some of those well above list price sales in a number of those sought after neighborhoods. In terms of condo average selling prices, I mentioned, that I really would like to think we can get over that 240 and stay there and bump up a little higher in 2021 based on you're seeing supply become more into balance, and potentially if it keeps up at the pace we're seeing this year could go into even seller's territory like we're seeing on the single family side. In terms of dollar volume, well, it's now obvious that we're going to eclipse the 5 billion like we did in 20 well over like we did in 2019 and got over for the first time in 2020. So I think 6 now is in reach. As I told Lanny, I don't think that's out of reach at all now, based on not only sales increase but the higher dollar volume that will be generated through these average price increases. And I'll leave it at that. If there's any questions, basically maybe one final point on the year. I will be definitely doing more assessment as we get to the first quarter. The challenge going forward, and this is where I'm going to be really watching it, the second quarter, as everyone can appreciate, we had a significant drop-off in listings. So we know, and sales dropped off about 30%. So we know we're going to easily beat last year's April, or I should say 2019 April. May was slow to get going, but picked up. June was our first month where we saw that nearly 1,900 sales. So what's going to be really interesting is to see when we get into especially the second half of 2021, how strong and how sustained this demand will continue, and also how many more listings we can see come into the spring that can help offset some of that, that shortage that we saw become a major deficit as we got into the end of 2020. So the real question becomes, how many more listings can we see come up back onto our system as more people are getting the vaccine and maybe feeling more comfortable? Now they're seeing a market that's giving them a great opportunity to maximize their sale price. I mean, that's kind of the big question that will follow. And that's not just in Winnipeg and our market region. That's certainly, that's going to be necessary across the country. And you guys are going to be very helpful. As our CEO of the Canadian Real Estate Association said in a recent article he wrote in the Globe and Mail, we need people to get their hammers out and start building. And we know you're doing that in fast and furious, but we need more of that to meet the demand. And I'll leave it at that, Lanny.
Thank you very much, Peter. That's a ton of information. It's extremely informative. So we'll just open up the floor to any questions. If you have a question for Peter, two ways of doing it. You can either type in the chat. That's the word bubble at the top right of your screen, or if you'd like, just turn your camera on. I'll identify you, and then you can go ahead and ask your question. No questions. Well, Peter, you must have hit on absolutely everything then. Oh, Justin, do you have a question?
Yeah, don't be shy.
Just you can just unmute your mic. Go ahead. Yep, go ahead.
So we've seen interest rates come down really low. We've seen the cost of building materials go up quite rapidly due to a number of reasons. Some of them COVID related, some of them duty related. And so we've seen this activity in the market. We've also seen the elimination of the impact fee in the city of Winnipeg. At some point, these things have to change. The interest rates are going to go up. We know the impact fee differential may be helping people deal with the cost of construction materials. You got any thoughts on what that's going to look like going forward, where prices might settle out or how they might settle out in the Winnipeg market?
Well, in terms of the interest rates, Justin, I actually had that question at the end of our forecast event in February, and I've been following, the Bank of Canada quite closely, and this new governor, Tiff Macklem, seems really set on seeing us as one of I call us the green shoots in the economy, and I'm talking us together. We're in this together, the resales and the new homes, and our industry has huge economic impact and big employment through all the construction and spin-offs. So my sense is that, at least from the Bank of Canada's perspective, I can't speak for the federal government because I'm hearing things that they might do something in the federal budget that might be worrisome. But at least from the Bank of Canada perspective, I don't see them doing anything dramatic at all with the overnight rate of 0.25. So I think we're in good shape, certainly for this year and maybe into 2023. In terms of those rising prices, I mean, we're already seeing some adjustments within our resale, the way condos are really picking up in much higher, percentages than we've ever seen before. So I think some buyers are already maybe adjusting from, if they're not going to be building a new home and they don't want to get into a major bidding war with some of the, our shortage of listings in a number of our neighborhoods and within rural Manitoba, they'll look at alternatives. So they've obviously got to level off at some point, but I'm not seeing anything on the horizon right now. And what I'm going to be watching for, and that's why I want to monitor, is if we can at least see more supply, well ahead of last year, because we didn't have any coming in the spring to help offset what we created in 2020. Then at least that could help a little bit on those. Those well above list price sales that we're seeing now.
Okay, any other questions for Peter? All right. Well, Peter, as always, we appreciate you sharing your expertise and your insight with our members. We always enjoy having you join us at the MHBA. So thank you for being our presenter, and thank everyone for attending our virtual lunch and learn session today. Please watch your inbox for notices on our next session. We are looking at scheduling something in April. So please keep your eyes out for your invitation and your notice on the next session. Again, thank you for joining us today, and have a great rest of the day, and take care, everyone. Have a good one.